Hello YouTube, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 5 stocks that in my opinion are the best long-term stocks to buy. These stocks are solid companies with established track records for providing dividends to its investors. They have great products that many people actually use in their everyday uh, things. They are well-known companies that, if, in my opinion, if you haven't have it in your portfolio, you might want to consider uh, putting these great companies into your portfolio. As always, all of this is not financial advice. This is just me sharing. But before we move on to check these out, do me a favor, hit that like button, hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. Hope you enjoyed the video. Now let's take a look at these companies. So the first company I want to talk about is Procter Gamble. The ticker symbol is PG. This is a company that is one of my favorites. Is a consumer company, packaged goods. I use a lot of their brands, as you can see. If you go to their website, you can see a lot of the brands that you probably use that you probably don't realize. So if you use it, in my opinion, if you use their products, you might as well start thinking about investing to it in that company. Going over now to Simply Wall Street, based on their dividend safety score, they rated as 99, which is very safe. Looking at the dividend yield is at 2.50. It is considered a market cap. Key metrics, you can see payout ratio is about 60. It's low for consumer staples. Forward payout ratio is about 57. You can see here during the recession, they've increased their dividend. And then you got right here an impressive 133 years without a reduction. You can see right there. The dividend growth, 20 years, 8%, last 5 years, 6%, and then the latest is 3%. And then right here, you can see just amazing, 133 years without a reduction. In my opinion, it's going to continue. 67 years of consecutive increases, and in my opinion as well, it's going to increase. You can see the payment details. You get paid quarterly, months of February, May, August, and November, and then your annual payout will be $3.76 per share. Ex-dividend date is about January 18, which is 5 days away. So if you are planning on purchasing these companies so you can get that sweet dividend payment, you might want to do it before that ex-dividend date. So just to keep in mind. And then it looks reasonably valued. As you can see, the payout PE ratio is at 23. Dividend yield is right here. And then you got your PE ratio of 23 versus consumer staples. 52-week range it is getting closer to the 52-week high. So it's not that cheap. So you might, in my opinion, you might want to wait. If there's any dip, then might be a little bit cheaper to get it at this time. If you look down, you can see the forward cash payout ratio, earnings payout ratio, earnings per share. You got your sales growth, and then you got outstanding sales, total sales. Return on investment capital, where you always want it above 12%. They feel like it's preference. It's about 22. Return on equity is about 33, which is above their 15% preference. Operating margin, free cash flow. You got your net debt to EBITDA, interest coverage. You can see right there. Seeking alpha, you can see based on their grades, pretty good. You got an A+ for dividend safety. Dividend yield is a C. And then you got your Wall Street ratings of holds, buys, and strong buys. 67 growth, and then 5-year growth of 5%. Payout ratio 60. Dividend yield again is 2.50, and then your annual payout is $3.76. And then you got your quarterly record and payout dates. Now moving along to our next one, which is Chevron. The ticker symbol is CVX. This is a company that engages in oil and natural gas production. Definitely another fan favorite in my opinion. I know for a fact that a lot of dividend investors like this company. I personally like this company as well. Now moving along to Simply Safe Dividend. Based on their dividend safety score, they're rated as 90, which is very safe. Dividend yield is about 4%, and then it is a market cap. Going down over to key metrics, you can see payout ratio is 43%. Forward payout ratio is about 47%. Look at that. Dividend streak of 111 years without a reduction. Dividend growth, the last 7 years, 7%. Last 5 years, 6%. And then you got your latest of 6% right here. And then look at that. This is what I like to see. Upward trend. 111 years without a reduction. That's just amazing in my opinion. 35 years of consecutive increases. Payout details, you can see quarterly in the months of March, June, September, and December. Annual payout will be $6.04 per share. Ex-dividend date is November 16. And then you got your payout date of December 11. It is also reasonably valued. And then you got all your other, here's dividend yield. 52-week range, pretty cheap in my opinion. It's really close to its low of 141. Again, the high would be 187. And then you got your PE ratio. Financials right here, you can see a little bit more. I'll swing it down. Sales growth, total sales, outstanding sales. Return on equity is 16. Return on investment capital is 15. Operating margin, free cash flow margin. And then you got your interest coverage. Okay. Moving along to Seeking Alpha, you can see based on their dividend grades, you got a B, dividend growth is a B, dividend yield is C, and then you got your dividend consistency is A+. And then you got your rating over here of all buys and hold. 36 years of growth, 5-year growth rate of 6%. Then you got your annual payout forward D of 6%, and then you got your other stuffs over here. Moving along to the next one, McDonald's, ticker symbol is MCD. This is a company that engages in operating of franchising of restaurants. Another company that in my opinion is a solid company. I personally love this company. I think it's a company that in my opinion will continue to grow and will continue to be here and continue to flourish, because everybody goes to McDonald's in my opinion. Now, if we go to Simply Wall Street, you can see Simply Safe Dividend. My apologies. Dividend safety of 77, which is safe. You got your dividend yield of 2.28. Moving along to the key metrics, payout ratio of 53, forward payout ratio of 54, dividend streak of 46 years without a reduction. Look at that. Last 20 years, 17%. Last 5 years, 8%. And then you got your latest of 9%. Again, upward trend, 46 years without a reduction, 46 years of consecutive increases. I think it's going to continue. Payment details, quarterly in the months of March, June, September, December. Annual payout would be $6.68 per share. Ex-dividend date is November 30, which has passed. And then you can see right here, another reasonable valued. And then you got your 52-week range. It is a little bit expensive right now, which is the high of $298. So if you're thinking of going and purchasing this one, you might want to wait for a dip and see if you can get it a little bit cheaper. Financials, you got right here, payout ratio, earnings per share, sales growth, total sales, return on investment capital, return on equity, operating management net, and then you got your interest coverage. Now, if we go to Seeking Alpha, you can see dividend safety of a D, dividend growth of A+, dividend yield, dividend, and then you got your holds, buy and holds. And then dividend growth 22 years, 5-year growth of 8%, and then you got your other stuffs in here, yeah? Next on the list is Microsoft. The ticker symbol is MSFT. Another one of my favorite companies. Engages in software, devices, tablets, computers, gaming. Definitely, I am a big fan of Microsoft as well. As you can see right here, definitely a lot of people use Microsoft for work and also for play. Looking at Simply Safe Dividend safety score of 99, which is very safe. You got your dividend yield of 0.77. And then looking at the key metrics, payout ratio of 27, which is low for most companies. You get your same forward payout ratio, dividend streak of 17 years without a reduction, and then last 20 years 19%, last 5 years 10%, and then you got your latest of 10%. Again, you can see another upward trend, uninterrupted dividend streak of 17 years without a reduction, 13 years of consecutive increases. So I expect this to also continue as the years go, especially with the AI movement. I think this is going to continue to flourish, in my opinion. Payment details quarterly in the months of March, June, September, and December. Annual payout will be $3 per share. You got your ex-dividend date of February 14. It could be overvalued based on Simply Safe dividend. And then you got your 52-week range. It is in the high one. So again, we'll always wait for a dip if you decide to enter in positions, in my opinion. You got all these other things as well. And then you got, now let's move on to Seeking Alpha. Based on their dividend grades, you can see right here, A+, D, and then A. And then your rating would be buy, strong buy, and a hold. And then you got 19 growth years, 5-year growth of 10%, which is pretty impressive. Annual payouts 26, and then you got your other stuff in here. And then the last on the list, you got Apple. Ticker symbol is AAPL. This is another great company, in my opinion, that engages in smartphones, computers, and tablets. I use Apple products a lot, so it definitely a must, in my opinion. Now, if we go to Simply Safe Dividend safety score of 99, which is very safe. You got your dividend yield, and it is a market cap. Key metrics: payout ratio is 15, forward payout ratio is 15, 11 years without a reduction. Dividend growth the last 10 years 9%, 5 years 7%, and then you got your latest. And then dividend streak 11 years, dividend consecutive increases of 11. And then details: February, May, August, and November. You get your annual payout of 96 per share. Ex-dividend date is November 15. Feel like they said it's also overvalued. And then you got your 52-week range. It is getting closer to the high of 198. So again, P ratio is 28 versus the IT informational tech of 24. And then you got your financials. You right here, Apple is a really solid company. Look at that. A return on investment capital 61, return on equity, which is 172%. Now let's go over to Seeking Alpha. You got your dividend scores right here. Growth of A, dividend yield of D, ratings of holds and buys and holds, 10-year growth, 5-year growth of 6%, payout ratio of 15. And then you got your other stuff as well. That's about it, guys. Those are my 5. Let me know what your 5s are. Drop it in the comment section. As always, please remember, always make sure you do your research. Also check out the other companies, other dividend companies that have also had videos about it. As always, please remember, stay cool, keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.